Hey guys, what's going on? Jebb here, and in today's video, we're going to be doing a little bit of technical analysis on Bitcoin and the cryptocurrency markets, and more specifically, I want to address the people in the cryptocurrency community who believe that $3,000 is not the bottom for Bitcoin, and perhaps you or they think that $3,000 will be broken and that Bitcoin will start heading lower towards perhaps price targets of in between $2,500, $2,000, $1,000, $1,500, perhaps even as low as a price target I've seen of $500. I've even seen people who are probably trolling saying that Bitcoin is definitely going to $0 and that Bitcoin is dead. Well, in today's video, I'm going to be dispelling those what I believe to be myths, and I'm going to be explaining exactly why I think $3,000 is the bottom, and I'm going to be showing you all the technical and fundamental reasons why I think that $3,000 is going to hold. I do think there's a very strong chance that there isn't, but I'm also going to be playing devil's advocate at the end of the video and laying out one reason that $3,000 may not hold. So definitely make sure you watch to the end of the video for that. But before we get into today's video, guys, if you enjoyed today's video, definitely consider dropping a like and hitting that subscribe button. Also smash that notification bell so you'll be updated every time a new video goes live. Without much further ado, let's go ahead and get right into it. We will do a little bit of short-term technical analysis here at the outset of the video because it is important to what we're going to be discussing in today's video. As you can see, over the last couple of days, Bitcoin has been rather green. It's definitely green coming here into Christmas, which is tomorrow. Definitely an interesting time for Bitcoin to be going up. I'm sure a lot of people are very happy about that. And we look here on the weekly chart, it becomes strikingly obvious just how bullish Bitcoin has turned. Of course, Bitcoin has seen a large movement here over the last 8 days or so, about a 33 to 34% movement. Nothing to really scoff at, especially in the bear market that we've been in. So it's nice seeing Bitcoin come up here and bounce from around this $3,150 region as it did a couple days ago, about 8 or 9 days ago now. Anyway, we're going to be getting back to that, but I do want to go ahead and do the crypto market recap to lead into what our topic is for today's video. And across all exchanges, Bitcoin is currently trading just below $4,200. A nice little place for it to be trading, and it's up about 4% over the last 24 hours. XRP is trading around 44 cents. XRP has done very well over the last couple of months, despite this massive sell-off that we've seen in Bitcoin and many of the altcoins, and it's doing very well today as well. Up 17% over the last 24 hours. Ethereum being up 17%. Likewise. The rest of the cryptocurrency markets are very green. Of course, we see that Tether is the sore thumb right there, being the only one in the red, but that's because Tether isn't a real cryptocurrency. But if we sort by change over the last 24 hours, we can see Pivx, Linky, Stratus, Crypto.com, and Veritasium are the 5 biggest gainers, 4 of them being up over 20%. And if we scroll down here, we're going to see that the vast majority of the market is in the green. We do have some losers here, but not a whole lot. Anyway, that leads us into the first thing that I want to talk about in regards to Bitcoin bottoming out at $3,000. There's 2 things we want to discuss here in CoinMarketCap. The first of which has to do with the market capitalization of the entire market. I've talked about how market cap levels as far as $100 billion, $200 billion, $300 billion, perhaps $100 or $250 billion on Bitcoin, for example, can actually be chartable levels of support and resistance that don't show up on the technical analysis over here on, for example, the Bitcoin over US dollar Coinbase chart. So there is technical analysis that you can do here on CoinMarketCap, and I want to show you an example of that. If we go to year to date here, actually let's go to the last 3 months here, we can see total market capitalization here on this chart right here. And what you see is that total market capitalization a couple of months ago pulled all the way back down to right around $200 billion and held some support down here. As you can see, we pulled back down several times and we held support there. Unfortunately, $200 billion did not hold because Bitcoin needed to go lower. The fundamentals weren't all that great. $6,000 was too high a level of support. Many different reasons we went below $200 billion. But now what it shows is that Bitcoin is setting a double bottom down here at $100 billion market capitalization. We look in here in the last month, this is a very recent development. Bitcoin pulled all the way down to around, total market capitalization pulled all the way down to just over $100 billion. And again, about a week ago before we started trending upwards. That's an important level of support to look out for because that is a very, very, very big even. We talk about in the Cryptocurrency Technical Analysis Academy in this video right here, gauging the strength of the levels and resistance, that video right there. We talk about how important it is to be able to understand what levels of support and resistance are strong and what levels of support and resistance are weak. And guys, the number 100, if you see 1 followed by however many zeros, I don't care what chart you're on, that is going to be a very important and very strong level of support or resistance simply because it has a 1 in it. Let me give you an example of that. If we go over here to the chart, Back in 2017, I was in the market in 2017, guys, of course, and a lot of people were looking at $10,000 as the be-all and end-all for the market. Everybody wanted Bitcoin to go to $10,000 in 2017, and of course, it went to $20,000, but everybody wanted $10,000. And $10,000 in this parabolic run-up from all the way down here around $3,000 back here, all the way up to $20,000, except for $8,000, was just about the only time Bitcoin found any kind of resistance in this parabolic run, was right there around $10,000. Very important level of support, and it became a very important level of resistance right over here. Anything that has a 1 in it followed by however many zeros is typically a strong level of support, and looking at $100 billion market capitalization being a strong floor for the cryptocurrency markets is a very good thing to see indeed, and I'm very happy to see that. Let me show you another example of that. Bitcoin, before it broke below $6,000, its market capitalization had hit a floor at $100 billion market cap, which coincided with about $6,000 here on the price action chart. So it's a very important thing to be looking at is total market cap and having that idea as to whether or not the market's going to go below that. The next thing here on CoinMarketCap that we want to talk about before we get on to actual technicals is volume. And guys, I want to bring up this volume chart for the total markets and for the Bitcoin markets, because if we come in here to the last year and we look at 24-hour volume and we take away market cap, we look at volume. Actually, let's go to the last 3 months or so. We can see the volume's been gradually picking back up. It's gradually been picking back up, and we can see that on the price action chart as well. If we bring our volume up here, what we're going to see is over the last month or so, ever since Bitcoin broke below $6,000, we've seen a lot of volume come back into the space. And a lot of volume, I mean that. There's been a lot of volume, and with that volume, there has come a lot of volatility. Those are two things that you need to start a bull market, because if you're not moving around a lot and you don't have a lot of volume, then how are you ever going to be able to push the market up through levels of resistance that you need to break to start a bull market? How are you ever going to be able to push all the way up here if you don't have any volatility? There wasn't any real way that we were going to start a bull market back here because Bitcoin couldn't move 5% to the upside to break any kind of major level of resistance to actually go and start a bull market. But now that we've seen a lot of volatility, definitely a lot of volatility, and also a lot of volume come back into the space, that means that it's much easier for Bitcoin to make large movements like it has here over the last couple of days and start breaking levels of resistance, some of which we'll be looking at here in a second, that we need to break to kick off a new bull market. Now, I want to put a disclaimer in here. I'm not saying that a bull market is coming in the next couple of months. I am, however, saying that the return of volatility and the return of volume is a very, very bullish sign. Those are two technicals and fundamental indicators that you really want to see do well before a bull market can start. That's pretty much everything I want to talk about here on CoinMarketCap. Of course, we see Bitcoin's volume has picked back up a lot. It used to be that Bitcoin's daily volume was hovering around a half of where it is now, while Bitcoin was trading at a higher valuation than it is now. If we look on the charts here, I believe we'll be able to see that. You can see here over the last 3 months, volume has been picking back up in the second half of November and on into this month. And as we can see, the volume's been picking back up while the price action has been going back down. So that's definitely an interesting thing to see and definitely a bullish development. Anyway, I believe that's all we want to cover on CoinMarketCap. So let's go ahead and get on to some technicals here on the chart, because I'm sure you guys are ready for them. The first thing that I want to do here is I want to go over something that I've talked about before, and that is the comparison of the 2018 bear market to the 2014-15 bear market back over here in the earlier part of this decade, when Bitcoin initially ran up to $1,250 or so and pulled back down to around $160. I'm going to go ahead and make this comparison. Now, there are some people out there that will say that this is an unfair comparison because the fundamentals are different, and I will give you that. There are very big fundamental differences between this market and this market over here. In 2014, we saw Mt. Gox get hacked, and 70% of Bitcoin trading volume got wiped out. A ton of people lost a lot of Bitcoin. Many people lost all their Bitcoin and became completely and utterly disenfranchised with the market. But look at it this way. If the market right now is following the exact same, is following in the 2014-15's bear market's footsteps in exactly the same way, and the fundamentals are better, what does that tell you? That tells you that even though we followed in the exact same footsteps, that the follow-up to what happened in this bear market, as opposed to what happens in the 2018 bear market, is probably going to be even better. Because right now we've seen the market do the exact same thing almost, and I'll show you in a second that it did over here in 2014, but the fundamentals are far better. And what does that mean? That leads me to believe that the next bull market will be a lot stronger than the bull market that came in 2016 and 17. Except for the little piece of devil's advocate that I'm going to be arguing for at the end of the video. Make sure you watch to the end for that, because there is a counter argument to everything I'm saying here. Anyway, Let's go ahead and analyze this. What happened in 2014? Well, Bitcoin went parabolic. Of course, we've seen Bitcoin go parabolic before. If you guys have been in the market for a little over a year, back over here in 2017, then of course you're familiar with what it looks like when Bitcoin goes parabolic. It's pretty fun. I'll put it that. It's the most fun you can have with your pants on, absolutely. Anyway, we saw Bitcoin go absolutely parabolic and run up to a new all-time high up here around $1,150 to $1,200, depending on the exchange, and then it retraced. And it's interesting where it retraced to. It retraced down to a level down here around $300 or so. We saw a very strong level of support back here that Bitcoin retraced down to around $300. We saw a pullback close to it right here. We saw some pullbacks to it right there, there, and there. But $300 was a very strong level of support for Bitcoin and really a floor of this kind of descending triangle pattern right here that Bitcoin would eventually break out of. Well, it sounds like I just described another market if you've been in the market for over a couple of months, and that sounds like exactly what the market looked like back over here in the earlier part of 2018. We saw a very strong level of support and a floor at $6,000. We saw a downtrend of resistance pushing the market towards that floor, and we saw Bitcoin in this descending triangle pattern eventually break it and go to the downside. That's exactly what happened in 2014, guys, and let me show you what happened after that happened. Bitcoin pulled back down to about 45%. I had about a 45% reduction in price action down to a new level of support down here around $160. So what we're saying here is that Bitcoin broke an analogous level of support. $6,000 over here in 2018 is analogous to $300 back over here. And it pulled back 45% down to a new level of support down here. Well, what happened in 2018 so far? If we look at this pullback over here after Bitcoin broke below $6,000, Bitcoin has pulled back 45%. Now, what we're seeing here is that Bitcoin has almost perfectly mirrored the exact same market structure that happened in 2014. And as I talk about in the course, in the market structure video, which is right there, I talk about in the course, and I talk about a lot on the channel as well, that market structure is so very important to technical analysis. When you understand market structure and when you understand how the market is reacting to its market structure and analogous market structure from the past, you have a very good understanding of how the market will move in the future. And the reason for that is because markets are cyclical. Markets tend to do very similar things over and over and over again. A market tends to go into a bull market, bear market, bull market, bear market, bull market, bear market. That's how a cyclical market works. And a similar thing seems to be appearing and proving itself to be true here on Bitcoin over the last 5 years or so, of Bitcoin going parabolic, pulling back down to a level of support, entering a descending triangle pattern, breaking down, losing half of its valuation, and then moving into an accumulation phase on into a bull market. So the markets in 2014 and 15 look very, very similar. But let's go back to what I said about the fundamentals just a second ago, because I think we can all agree that the fundamentals in 2018 are far better than the fundamentals in 2014 and 15. I'm not going to go into this. All you have to do is go to the website bitcoinobituaries.com and look at how many people were saying Bitcoin was dead in 2014. All you have to do is go back and look at when Mt. Gox was hacked back over here and see this massive candlestick. All you have to do is look at the fundamentals back from 2018 or 2014 and ask the couple of people in the comments section who are probably in the market back there. If you're in the market in 2014, let people know that the fundamentals were far worse in 2014 than they are now. We have Lightning Network coming online. We have a lot more people in the space. We have a lot more awareness. We have people in the mainstream media talking about Bitcoin. Bitcoin was turning into a meme here at the end of 2017. You saw it on like Dude Perfect, and Ellen DeGeneres did something about it. A lot of people were talking about Bitcoin, and Bitcoin has a lot of awareness about it that will be a resource that Bitcoin will leverage moving on into the next bull market. So the fundamentals are far better, but what does that mean? That means that the market in 2018 has mirrored 2014 very closely, but in 2014 and 15, that bear market, it took a while for Bitcoin to get its feet back under it and start going parabolic again, but the fundamentals were worse. The fundamentals are better this time, so what does that mean? That means that more than likely the next bull market is going to go a lot quicker than the bull market in 2014 and than the bull market of 2016 and 17 did, simply because the fundamentals in the prior bear market were a lot stronger. It's like how when you have a day where it's 50 degrees outside and then it gets really cold the next day, it's not going to be as cold the next day because it was 50 degrees the day before. It's not going to be like 20 below the next day because it's 50 degrees the day before. But if it was 20 below the day before, it might be 40 below the next day. The same thing applies to bear markets. When the bear market preceding a bull market wasn't that severe, then you're probably going to see that the next bull market is going to be a lot stronger than it otherwise could have been, simply because the bear market wasn't that terrible and the fundamentals were continuing to improve. That's not all, guys. We do have a lot more to get into, and I do apologize for this video being out late. It was a video that took a lot of research and took a lot of time for me to articulate my opinions. Anyway, Let's keep going here. What else do we have to look at? Because there is a lot to look at. Let's bring our moving averages up on the weekly chart. This is an important one. Look at this moving average right down here, guys. The 200 simple weekly moving average right down here. I've been talking about this moving average for months, and Bitcoin came down to it exactly and bounced exactly off of it. It seems that Bitcoin has bounced off of it rather than $3,000 actually, which means that we have two levels of support and resistance. We have something called the convergence of support and resistance, which we also have a video on the course in the course. That's the convergence of support and resistance. And when you have convergence of support and resistance, you have convergence of a very strong level of support and a very strong moving average, then you have a very, very strong level of support. And the same thing has happened here where we see Bitcoin has gotten support on the 200 weekly simple moving average, very, very important moving average, and we see that it also got support on $3,000. If we were to go way back in time, we would see that, that the 200 weekly simple moving average would be important, but we don't have that chart up at the moment. Another thing that we want to talk about is $3,000 itself. Let's get rid of our moving averages here for a second and go back to the daily chart. What do we see here? $3,000 is a very important level of support in and of itself for two different reasons. One, $3,000 used to be an all-time high and then a low in the market. Right over here, it was a very important level of support and resistance. I was in the market back here, guys, and everybody was talking about $3,000. We got resistance at $3,000, then we got resistance at it and broke it. Then we used it as a level of support back over here in September of 2017. Very important level of support. But that's not all. Billy Mays here, guys. Billy Mays keeps getting into my channel somehow. Billy Mays here, because that's not all. Let's look at why else $3,000 is important. If we look at retracement from all-time high, $3,000 is 85% retraced from all-time high of $20,000. And an interesting thing shows up if you come back here and compare that to the 2014-15 bear market. Let's take the all-time high from there and pull it down. What do you see? Back over here in the 2014-15 bear market, Bitcoin retraced 85% from all-time high. I wonder if that's a coincidence. I don't know about that, guys, because there's a lot of different things that are lining up to show that 2018 is looking very similar to 2014. Now, of course, I'm not saying that all of this price action is happening because of manipulation, but what I am saying is that markets are cyclical, and oftentimes they will do the same thing over and over and over and over and over again with a slightly different look to them, because, of course, this descending triangle looks a bit different than this one back over here, but in general and in the technicals, they do look very, very similar. I think I've made my point, but I'm gonna keep going because I want you guys to understand just how important this is. Let's go out to the monthly chart. I do believe there is a moving average that we want to look at out here. And yes, there is. There is the 20 monthly simple moving average right out here. You see this red line down here, this red moving average? Guess where it's sitting? It's sitting at about $3,000. Another important moving average that I'm sure will become even more important moving on into the future as Bitcoin continues to develop and Bitcoin has a lot more moving averages start showing up on the monthly chart as Bitcoin develops. Now, of course, this is the first time that this has really been an important moving average, but I would wager that that's going to continue being an important one. Of course, the 20 monthly EMA is far higher than this. We're below it, but that's okay. We do have another moving average on the monthly giving us support. Let's see, what else do we have to cover? Well, there's one more thing that I wanted to cover. I forgot about this too. Here's another thing. Billy Mays here, guys. Billy Mays just keeps getting in my channel. Let's take a look at the RSI. Let's look at 2014 and 15. How did the RSI look back then? Well, Bitcoin's RSI went insanely insanely overbought here at the end of 2014, the end of 2013 when Bitcoin ran to all-time high. And the same thing happened over here at the end of 2017 when Bitcoin ran to all-time high. And then what happened? Well, Bitcoin initially pulled back down here to around $300 and set a bottom around 40.50 on the RSI right here. You can see that right there, coinciding with this bottom right here. And then it broke it. We broke the level on the technical chart and we broke the RSI support, pulling down to around 30 on the RSI. Bitcoin pulled down to around 30 on the RSI in 2014 and 15, signaling the permanent bottom. What have we seen now? Bitcoin has pulled back down to around 30 on the weekly RSI, in my opinion, signaling a very strong bottom. Tell me in the comments section down below what you think about this, guys, because a lot of times when you're doing long-term technical analysis, the fundamentals are important. The fundamentals are very important. In fact, I would wager that the fundamentals are more important on longer-term technical analysis than they are on shorter-term technical analysis. Unless you're talking about like hour candlesticks when a piece of news breaks, the fundamentals over the long term are ridiculously important. But the technicals are also normally very, very accurate on long-term charts because so many people have been looking at them for so long that when you start seeing signals from these longer-term technical indicators, such as that RSI I just showed you, such as the 200 weekly simple moving average, normally those longer-term pieces of technical analysis, especially when they're repeating a piece of market history that happened years ago, normally they're very, very strong. So tell me in the comment section down below, do you think $3,000 is the permanent bottom? Do you think we're going to break it? What do you think? Did you, at the beginning of this video, think $3,000 was going to be broken and now I've changed your mind? I'd love to hear your opinions, but wait, once more, Billy Mays here, guys, because there is more. I do want to go ahead and bring a counter argument to literally everything I've just said. Now, Before I say this, I think that $3,000 is probably the permanent bottom. There is obviously a good chance that Bitcoin goes below it. You always have to leave room for that. You always have to leave room for RNGesus coming in here and throwing Bitcoin way below $3,000 for whatever reason. Maybe Donald Trump bans Bitcoin or something. Maybe the European Union passes Article 14 and says no Bitcoin. Who knows? There's always something that can show up. But one threat that I do see to the continuation of this Bitcoin, well, rather the beginning of a Bitcoin accumulation phase, moving into a potential Bitcoin bull market is this, and that would be the stock market. If you watch the video linked in the top right, and I'll have it on the end card as well, then you'll see a video where I talk about the U.S. stock markets and the global economy in general. And the global economy is not doing very well. I'm going to be brief here because I do have an entire video on this. But in general, the stock markets for the United States and the global economy are not looking very healthy. They're not looking very bullish, and in fact, it looks like we may be entering some kind of financial crisis over the next 24 months or so, perhaps even less time than that. Right now, the S&P 500 and many other stock markets and many other indexes are threatening to go below 20% retrace from all-time high, which would indicate the beginning of a bear market and the beginning of a new recession. If that happens, we haven't seen what that would do to Bitcoin just yet. Every time that Bitcoin, well, basically for the entire time that Bitcoin has been around since January 3rd, 2009, the U.S. stock market has been in a bull market because right around the time Bitcoin was created was the beginning of this bull market that the stock market has been in for the last 10 years, right over here. Bitcoin was created right over here on this market, right over here, just at the very climax of the bear market here in 2008. And when it started going on this bull market, that's basically what Bitcoin has seen for the entire history, for its entire history. So we don't really know how Bitcoin will react to a bear market in U.S. stocks, whether or not a bear market in U.S. stocks means that people are going to bring their money and put it in Bitcoin as a hedge against U.S. stocks, or if Bitcoin is going to hurt because a lot of the volume in Bitcoin is coming from people that are also in Wall Street, and they'll pull their money out of Bitcoin to go and short in Wall Street or to go and buy long-term positions in the stock market. So there is a big wild card coming because I do see some kind of financial crisis and recession coming over the next 12 to 24 months. We're going to have to see how that affects the Bitcoin market. In principle, Bitcoin is designed to try and hedge against these markets and do well when these markets are not doing well, and to do very well when U.S. stock markets, when the old school financial system, if you will, is not looking all that healthy. That's what Bitcoin was designed to do. So we'll see if Bitcoin can fulfill its job and do very well during a bear market and during a recession. But guys, you do have to realize it's going to get rough over the next couple of years, I do think. So we're going to have to see how that plays out with Bitcoin. If Bitcoin were completely isolated and the rest of the markets, the rest of the global markets had no effect on it, I would definitely say that a bull market is coming in the next 12 months. But considering the way the stock markets are looking, we're going to have to be careful and we're going to have to look out. Even if even if the S&P 500 and many other important indexes and stocks go into bear markets though, I still think $3,000 is going to hold, and I would love to hear your opinions in the comments section down below. Tell me if you guys think Bitcoin has bottomed out permanently. Is $3,000 ever going to be broken? Will Bitcoin go below $3,000? Will Bitcoin stay above $3,000? Will Bitcoin trade sideways for the next year? Is a bull market coming in 2018? In 2019. Let's get a conversation going down there, guys. I do read every single comment, and I do try to respond to as many of them as I can. So go ahead and drop a comment. I would love to read and see what you guys have to say. Before we wrap the video up, though, I do want to talk about the Cryptocurrency Technical Analysis Academy because we do have a sale going on that will be ending in about 36 hours. So I'm going to go ahead and jump over here and show you guys what we have to offer here. We have over 20 videos talking about cryptocurrency technical analysis here in CT2A and over 5.5 hours of content for $119 right now because there's a sale. If you use the coupon code Christmas2018 in the description, you get 20% off. You get access to all of this content. This content is a lot. There's a lot of content here, and it is something that I poured my heart and soul into. We've had hundreds of people join the course. We've had a lot of people join the course, and every single one of them has been happy. We've had a couple of people give constructive criticism, of course, but people in general are having a very good time with the course. They're enjoying the course, and they are getting a lot of value out of it. We've helped a lot of people. If you go on the community tab of the Crypto Jebb YouTube channel, you can see some testimonials of people that have used the course, and when you go into these videos right in here, you will see what they have to say in the comment section if you guys join. Overall, I showed you guys a couple of the videos that we talked about in today's video. We talked about gauging the strength of support and resistance. We talked about market structure. We also have videos on mass psychology, how to plan and execute profitable trades. This is probably one of my favorite videos in the entire course. Very, very good video. Honestly, this video right here, if you're trading with a couple $1,000s and you haven't learned how to do what's in this video right now, this one video is worth the price of this course, because this video is really good. I give you guys 3 examples of trades, how to find good trades, how to set up good trades, how to do your stop losses, how to use technical analysis to try and set price targets. I go over all of that with 3 different example trades in that video. Overall, I think it's a good product, and if you guys join, I think you will have a good time in it, and I think you will get a lot of value out of it. And if you don't, we have a very fair refund policy. If you start watching less than 30% of the course material in the first 14 days of buying the course, I will give you a full refund, no questions asked. You'll get your money back, so there's really no risk. Go ahead, check the link in the description with that code, Christmas2018, to get 20% off for a limited time only. But anyway, guys, that is basically going to do it for this video. Do tell me in the comment section down below what you think of today's technical analysis. And if you're in the Cryptocurrency Technical Analysis Academy, let people know in the comment section down below what you think of it. I know we have some people watching this video who have gone through the course, and from everything I've seen, you guys seem to be very happy with it. Anyway, guys, that is basically going to do it for this video. I do want to thank each and every single one of you for watching as always, and I will see you guys in the next video. Peace.